All right, folks, welcome back. This is our Thursday, January 6th, 2022 commentary. All right, so we're looking at the dollar index, and I promise this is going to be very brief, very short, because it's really nothing really to talk about, and I gave you a long video last night too. So good feedback from that. No sense of sending any more of it. I appreciate those that have done that, but just put the work into it and you'll find that it is going to be very helpful to you. All right, so we're looking at the dollar index daily chart. I mentioned yesterday that we have a bullish order block. Traded off of that. So far, we've had intraday price action support the idea that maybe we want to start working towards this buy-side liquidity pool, maybe even expand up in here. Nothing for sure because we're still inside the consolidation, but again, I'm favoring still the upside. All right, so buy-side liquidity here. And this run here yesterday, I mentioned how it was nice to come off of that. We expand up initially. Now, I would have rather seen it drop down first, not go up there first. Remember, I said this yesterday on the relative equal highs in here. I think if I'm not mistaken, it was on the 50-minute time frame that I mentioned that I liked this area. Felt that it was going to draw to that. It did it first. Preferably, we would have rather seen it go down, hit consequent encroachment between this low, this high, hit that, and then go to that level. That would have been more favorable. But because it did this first, it ran for buy side first, then sell side, and then to a rebalance, which makes things a little bit more consolidated. 15-minute time frame, here's those relative equal highs I was mentioning. I liked that area. My eye went right to that yesterday. I drew your attention to it. And we ran right up into that first. Fair value gap in here. Breaks down. Short-term swing low, broken. Market structure back to a fair value gap after taking buy side. Drops lower, sell side liquidity. And then the hourly consequent encroachment level, which doesn't look as obvious on the 50-minute time frame. But again, go back to the hourly chart, you'll see that's that level here. And we hit that, and then bounced off of it back into this area of imbalance and the volume imbalance right in there. Boop, right there, just like that. Euro dollar daily chart, still stuck in the mud. If this is not a highlight to really nail down the importance of knowing what you're looking for and why we wait, there isn't a lot of movement in this pair right now, okay? There isn't a lot of movement in the dollar. So the crosses are what's moving right now. But for you as a developing student learning how to read the majors with the dollar, this is what we're focusing on. We're waiting for this range to be broken. And while I prefer going lower, I don't really care. It can go higher and leave it going north. I don't care. But it needs to leave it. As long as we stay inside this consolidation, that means large funds are not at work yet. And if they're not at work, the central banks will not be busy providing them the counterparty liquidity. Therefore, the markets won't be moving around and they'll remain stagnant like this. So that's the importance of why we're waiting. That's what we're looking for, and it's not there yet. So don't be in a hurry to push buttons trading Forex right now. Just relax. All right, the hourly chart on Euro. I mentioned how we came up in here, closed that in, created a sell side imbalance, buy side inefficiency, left a little portion of that open in here, and then sold off intraday on that as well. I still favor the sell side liquidity down here and over here in the old lows. And 15-minute time frame, Euro dollar. Small little imbalance in here with a breaker. So we trade up into that, left a small little portion open, broke down, consequent encroachment on the displacement in here. Drops down, fills in back to the bearish order block, and attacks the sell side liquidity resting below here. Not a lot of range here, very, very small, tight intraday range. So again, unless you're a 1 minute scalper that's really in here trying to fine tune your 1 minute and 5 minute, just leave it alone. Just annotate and log for study journal purposes only. Pound dollar, just working inside the range that we've created from the last 2 days, so nothing terribly exciting here. After taking the buy side here, breaking down sell side, imbalance, we broke down into that initially and then rallied up. Nothing in here has my attention. I'm not really interested in anything that is on this particular time frame or this pair. If it were to roll over, say the dollar goes higher, if this does roll over, we have this area right in here, buy side of balance, sell side efficiency with bullish order block and sell side liquidity, and that would take us around to that level there, maybe even sweep below here. But again, I'm not interested. I'm not taking any trades. I haven't done anything, not even on a paper trading basis. Just sit still. Trust the process of not doing very much in the month of January. We're just waiting and observing. When it becomes obvious that we should be participating and engaging, it'll be very clear to see that it's time to do so. Right now, it's not. 15-minute time frame, again, nothing in here that's exciting, nothing in here that's worth mentioning. So hopefully you guys can see that this, compared to when I'm teaching you and showing you that we're in high probability conditions, there's a stark contrast. And when it's not high probability and or a lot more volatility, this is what you get, which is very, very small ranges, very difficult to know which side of the marketplace is going to reach for next. And that's what makes it low probability for me. If I can't determine with a great deal of certainty which side is going to go for, buy side or sell side, I have no framework or bias that I can trust. So if that's the case, then I have to stand down and sit on my hands and do nothing. Absolutely no engagement whatsoever. And that is patience. That is responsible analysis. And that's what you're looking to forge on your own. So that way you're not rushing to do something when it's really not likely to be favorable for you. And that, my friends, is going to be it. Short, sweet, until I talk to you tomorrow. Keep your powder dry. We're not trying to do anything. We're just letting January do its thing. Let it build in the sentiment. Let the large fund traders, institutional traders, get involved with an idea that they want to participate in. And the central banks will begin their dance with these institutional traders and create displacement, and then starts movement in these markets, which is what we're looking for. Right now, again, stagnant, quiet markets are not favorable for high probability. Just simply wait.